Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Midea Group Co. Limited annual report. Midea Group Co. Limited is a leading manufacturer and seller of electrical appliances globally. The company operates in various sectors, including smart home systems, building technology, robotics and automation, and industrial technology. Its product offerings are diverse and cater to both residential and commercial needs. In the smart home segment, Midea provides household air conditioners, central air conditioners, heating and ventilation systems, kitchen appliances, refrigerators, washing machines, and small appliances. The company also offers commercial and industrial solutions such as elevators, high and low voltage frequency converters, medical imaging products, robots, and automation systems. In addition to its core business, Midea Group Co. Limited has diversified into other innovative areas including smart supply chain management, sales, wholesale, and processing of household appliance raw materials. The company also provides financial services like deposit taking, interbank lending, consumer credit, buyer credit, and financial leasing. Furthermore, it offers Internet of Things solutions to its customers. Overall, Midea Group Co. Limited's extensive product portfolio and diversified business segments have enabled the company to establish itself as a major player in the global electrical appliance market. Midea Group Co. Limited market capitalization of $659 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Midea Group Co. Limited holds a significant advantage in their industry. Midea Group Co. Limited trades at a higher price-to-earnings ratio of 13 times and a higher price-to-book ratio of 2.48 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 5.18%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth for companies can be categorized into common themes and industry-specific drivers. At the core, many companies have invested heavily in digitalization and AI to improve efficiency, reduce costs, and enhance customer experience. This digital transformation has enabled them to expand their presence in domestic and international markets through various channels. In addition to digital transformation, product innovation is another key driver of revenue growth. Companies have introduced new products with enhanced performance, features, and technologies to stay ahead of the competition. Furthermore, expansion into new markets has also contributed significantly to revenue growth, as companies have increased their market share in various segments such as HVAC appliance components, commercial multi-split air conditioners, and centrifugal chillers. Efficiency improvements are another crucial factor driving revenue growth. Companies have implemented process improvements, automation, and optimization to reduce costs and increase productivity. Overall, the primary drivers of revenue growth are focused on digital transformation, expansion into new markets, product innovation, and efficiency improvements. Net income experienced a significant increase from RMB 107,102 million to RMB 120,040 million, representing a 12.1% change. This growth was also reflected in the net profit attributable to shareholders of the parent company, excluding non-recurring items, which showed a 14% year-on-year increase and a 15.4% rise. Profit margins remained relatively stable, with gross profit margin remaining unchanged due to effective management of external shocks and optimization of product structure through technological innovation. However, there was a slight increase in net profit attributable to shareholders of the parent company, excluding non-recurring items, by 0.2%, from 9.5% to 9.7%. The company's financial performance indicates a consistent generation of positive operating cash flow. In both 2024 and 2025, the net cash generated from operating activities was substantial, with RMB 60,512 in 2024 and RMB 53,346 in 2025. This trend suggests that the company is efficiently managing its operations to produce a significant amount of cash, which can be utilized for various business purposes such as investments or debt repayment. The company's debt level has undergone significant fluctuations in recent years. Initially, the total borrowings decreased by a substantial 23% between two periods. However, this decrease was followed by an increase of 3.5% in another period. Furthermore, non-current liabilities saw a notable rise of 17.3%. Despite these increases, the company's debt level is expected to decline in the future, with projections indicating a reduction from RMB 83.3 billion in 2024 to RMB 64.2 billion in 2025. In terms of interest expenses, there is limited information available. Finance costs did increase from RMB billion to RMB 0.9 billion, but this was accompanied by an increase in interest income from RMB 9.7 billion to RMB 10.1 billion. As a result, it is unclear whether the company's overall interest expenses have changed significantly. The company's financial performance has been mixed across various segments and regions. On a positive note, smart home solutions and industrial technology have been the standout performers, generating segment profits of $4.5 million and $5.1 million respectively. These two segments have demonstrated strong growth and profitability. In terms of regional performance, the Chinese mainland has seen significant revenue growth from external customers, increasing by $22.5 million. Additionally, overseas regions in 23 countries have also performed well. However, one segment that has struggled is building technology, with a segment profit loss of -$2.6 million. Despite this, there are no poorly performing regions to report. Overall, the company's performance suggests areas for improvement and opportunities for growth in certain segments and markets. Management is optimistic about the company's outlook, citing expected double-digit growth in 2026 driven by declining robot prices and significant investment in downstream industries. The company plans to expand its smart home appliance market, enhance user experiences, and accelerate global breakthroughs for its own brands. To achieve this growth, Midea will deepen collaborations with sports organizations, strengthen brand awareness through sponsorships and online content marketing, and provide green, efficient, and intelligent products and technological solutions. The company is committed to driving innovation and building a global presence from China-based roots. Key priorities include achieving technology leadership, driving growth through innovation, and improving profitability while balancing consumer and business-to-business businesses. Midea will also focus on product and technological innovation, comprehensive cost leadership, and continuously strengthening organizational capability and resilience. The company's financial activities have been marked by a commitment to returning value to its shareholders. One key aspect of this is the payment of dividends, which indicates that the company has distributed a portion of its profits to its investors. This practice not only rewards existing shareholders, but also signals confidence in the company's future prospects. In addition to paying dividends, the company has also engaged in share buybacks. This strategy involves purchasing back outstanding shares from the market, thereby reducing the total number of shares in circulation and potentially increasing earnings per share for remaining investors. By doing so, the company demonstrates its confidence in its own value and its desire to enhance shareholder returns. There are concerns about inventory buildup, but not supply chain disruption. The data suggests that finished goods inventory increased by 2.3% from 2024 to 2025, page 12, indicating a potential issue with inventory management. However, other metrics such as inventory turnover efficiency and central warehouse inventory cycles suggest improvement rather than concern. A closer look at the numbers reveals mixed signals. While inventory turnover improved in some areas, pages 38 and 82, there is no specific mention of concerns about inventory buildup on page 42. This ambiguity suggests that while there may be some issues with inventory management, they are not widespread or severe enough to warrant significant concern. Overall, it appears that the primary concern is inventory buildup, but further analysis is needed to fully understand the scope and implications of this issue. That concludes the financial summary for Midea Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.